So I gave you my entry timing that I use every single time that I lay on risk in these markets. Now that alone is a gold mine in itself. Now for this video, I wanted to do something a little different and also special. I want to give you my entire strategy that I use week in and week out that has allowed me to become a full-time day trader. Now, first of all, ask this question to yourself. How is price delivered in these markets? You should know this by now, but all we do is take out old highs and lows and rebalance imbalances. That's it. There's literally nothing beyond that point. Those are the only two things that price does in the market. Now, my Forever model is based off of 4 key concepts: internal range liquidity, which is fair value gaps or imbalances; external range liquidity, which is old swing highs or lows; SMT divergence, order blocks or change in state deliveries; and fourth, most importantly, time. Now, I could safely say this right now that the best way to navigate and trade these markets is trading continuations rather than reversals. Now, a continuation trade meaning trading in the same direction as the higher time frame trend, aka internal range liquidity to external range liquidity draw. What you really want to avoid, especially as a beginner, or if you're at the point of break even and you're not at the point of full-time profitability, you don't want to be looking to trade reversals. You don't want to be looking to take trades that are from external range liquidity back into the internal range, because that is a disrespect to the higher time frame trend. Now, my model and my exact approach, the Forever model, simplifies everything to the T. It has changed my life and it has changed many other traders' lives too. Now follow along. Let me show you this trade that I took on the NASDAQ that made me over $3,500 utilizing my simple copy and paste approach to the Forever model. Let's hop right into these charts. Starting off, guys, we are on a daily chart and we're looking at the NASDAQ on the left, the S&P 500 in the middle, the Dow Jones on the right. What is the first thing that you guys notice about these charts? What is the first thing that we notice? We have an impulse leg on all 3 of our index futures. Now, what did I say before in the beginning of the video? What does price do? All we do is we take out old highs and lows and rebalance imbalances. Now, in certain scenarios when price is gravitating and pushing so far above, we took out an old high here, as you can see on the NASDAQ, the S&P 500, and the Dow Jones. We took out an old high. What are we waiting for next? What would we be anticipating? We want price to at some point rebalance and imbalance. That is the next thing that we're waiting for. So I'm going to watch and pay attention to the first area of opportunity of where price then retraces into an imbalance for me to then capitalize on a trade to then take out another old high. So the only pair that we actually have here that has retraced into a fair value gap or an internal range liquidity pool is the NASDAQ. But now, since notice what I just said there, the only pair that has retraced and tagged an imbalance has been the NASDAQ. That is our indication of SMT divergence. We have a lower low on the NASDAQ inside of a key level, and we have higher lows compared to our correlated pairs. We have the Dow Jones and the S&P 500 showing relative strength compared to the NASDAQ that actually rebalanced and imbalanced. Now, since we tagged this internal range liquidity pool, this is the IRL, what would we be anticipating price to do next? Gravitating to the external range liquidity pool. This is our ERL. What did I say before in the beginning of the video? I said all price does is what? We take out old highs and lows and rebalance imbalances. All you should be doing and all you should be focusing on is continuation plays. What is a continuation play? A continuation play is an internal range liquidity pool tag to an external range draw. But how is price going to get to that external range draw after it tags the internal range? Right here is your answer. SMT divergence at or inside of the tag of that fair value gap. That is our step 1 and our step 2. Now we have a narrative build. Now we have an understanding as to what to look for next, how to capitalize on an intraday move to see if we can capitalize and jump in on this massive expansion, drawing to the external range highs aka all-time highs on the NASDAQ. So since we framed our higher time frame, we know price is wanting to expand higher. So I'm going to go down to a 4-hour chart perspective just to see how is price reacting inside of that daily gap. Now, looking at this 4-hour chart, you can see that the S&P 500 and the Dow Jones, they made the higher lows, the NASDAQ made the lower low. So you might be asking me, Matt, why are you prioritizing the weaker pair in this sort of scenario? I'm prioritizing the weaker pair in regards to the structure as to what is being offered after that higher time frame key level tag. Look at how middleman the S&P 500 has been in regards to trading higher. Look at all of this chop and sideways movement compared to the NASDAQ that actually had a flush lower that is looking to have a run higher. The Dow Jones has just been an aggressive one-sided move that really hasn't offered any sort of clean entries for me to capitalize on. And it's also another pair that I don't really trade, and I'm not familiar with the Dow Jones. The NASDAQ has always been my bread and butter, so I'm going to prioritize and focus on this, even though it is the higher time frame depiction of a weaker asset. I'm still going to prioritize and capitalize on this pair in particular, rather than the Dow Jones and the S&P 500. So today at 8:15, we had a high impact news driver, which was a ADP non-farm employment change. So here is some free game that I'm going to help you guys out with and put you guys on to incorporate into your entry model mechanics and your strategy. I said this in my last video, I'll re-say it again here. This is how you should be capitalizing and trading news events, well, that aren't in particular pre-CPI, NFP, or FOMC. Disregarding those three, you can utilize news to your advantage and then determine what price will do. So what I mean by this, at 8:15/8:30, we're anticipating some sort of manipulation move. We want to see something happen and understand, is there going to be an SMT set in place? Is there a clear manipulation? Can I jump into this trade prior to equities open? And where is price most likely going to go to in that day? Are we going lower or are we going higher? So if I replay price and I go back to the 6 a.m. 4-hour candle, this 4-hour candle in particular, what does it do? This is our daily SMT resting here. We also had a 4-hour SMT resting here. So we had another round of SMT on the 4-hour chart running these 4-hour external range lows, because as you can see, the S&P 500 failed to run lower, and same with the Dow Jones, made the higher low resting there as well. So again, another round of SMT, but during this 6 a.m. 4-hour candle, this is when that news event happened. So what I want to show you guys is the 15-minute chart and see what is going on and if there is even an opportunity to capitalize within this wick before that expansion that we just had on the previous green candles from 10 a.m. So let's dive into the 15-minute chart to see how is structure aligning itself for a potential execution. All right, guys, so here is the 15-minute chart, and I want you to look very closely here. We have 8:15 news at this vertical line. The next 15-minute candle at 8:30 does what? Clears the short-term lows resting here and digs deeper into that daily gap running the previous daily lows, creating a big SMT between the S&P 500 and the Dow Jones. So 9:30 is our next key time for us to understand what is price going to do next. That is our next time to focus on. But at this point, we could think to ourselves, is this 8:30 run lower the manipulation before price can go higher? I don't know yet. What do I have to do? How am I going to know price is going to move higher from here, or is it going to continue lower? We have to wait. Wait for what? a change in state of delivery and an order block to form, aka price closing above this specific down close candle that cleared the short-term low and then also created SMT divergence inside of a higher time frame key level. That is all we need to do. Wait. Now, I know I make this look easy here, and I know that you could still be struggling and going back and forth and not really knowing what to do. If you need that extra push in your trading, I have made something. It's an accountability factor where I look over your shoulder and monitor every single trade that you take. I am basically the shadow that watches every single move that you make. If you want something like that, if you want an accountability factor to really get you to the point of profitability, there's a link in the description of this video. Check it out and maybe we can work together. So what we're anticipating right now, and we're waiting to see if it could happen, expansion higher, closing above that down close candle that ran the short-term low, trading back into that candle's order block, then trading higher, looking to target resting highs above. And as you can see, we had relative equal highs at London here that had no SMT between the three correlated assets. This was a picture perfect draw on liquidity for the day to utilize for higher prices. So we're waiting to see if we can get that run higher in our change in state of delivery. So let's skip to the next 15-minute candle, see what happens here. We have a good, strong 15-minute candle. See what happens on the next. Boom, right there at 9 o'clock. What do? We confirm and close above that candle's opening price. Now, a lot of you guys might be hesitant to execute prior to 9:30, but trust me when I say this. If you can wait and monitor price, if a high-impact news driver at 8:15 or 8:30 manipulates lower or higher into a key level, creates SMT, you are going to then assume that the 9:30 equities open in this scenario will be the news driver that pushes price higher. Because if we already had a manipulation at a key time with a volatility injection, you will not anticipate or assume that 9:30 is going to run it lower again and manipulate twice. Because if you also look at this and pay close attention, what did we create at these 15-minute lows here? Between the NASDAQ and the Dow Jones. What happened right here? Another round of SMT at the 15-minute lows. While we already had SMT at these lows, we create a second stage of SMT again after we had that manipulation at 8:30. I said it in the last video, I'm saying it again, the second stage of SMT at a key, after a key time, after SMT is created and the change in state of delivery. So at this point, I said I'm going to look for a starter position, and I bought this candle's opening price here with my stop loss at the SMT low, targeting the London session highs all the way up here for a 2.5 RR. As you can see here, the next candle tags me in. So I'm in before equities open at 9:15. I'm in there, and then what happens at 9:30? Driver. Continuation higher. Look at the difference also between the NASDAQ and the Dow Jones and the S&P 500. What is going on here? We have a lethargic moving price delivery here on the S&P 500. We have a weak pair here, and we have a strength pair here. We have overall strength in the NASDAQ, overall weakness on the Dow Jones, and S&P 500 somewhere in the middle. And as you can see here, we have a clean, smooth, low resistance liquidity run to take out those London highs. Probably one of the smoothest deliveries that we've saw in a while. And this is the exact same approach that I'm saying to you guys in every single trade breakdown. All you need to do is focus on those four concepts that I said: internal range liquidity, external range liquidity, SMT divergence, order blocks, change in state of deliveries, and time. Align everything together, and you will understand how the market truly books in price delivery, your win rate will skyrocket, and so will your confidence in regards to execution. This is the truth. This is the easiest way that anyone could portray price delivery. There is no other secret sauce behind this. Pay attention to how I'm utilizing all of my trades. Pay attention to the structure behind everything. Pay attention to the timing, especially this here. This here for the SMT being created at a key time, waiting for those key times for the SMT, for the manipulation, then trade in the opposing direction of the manipulation for your draw on liquidity intraday. That is the key here. That is what is going to change the game for you. My forever model has always been there, but the reason why you're kind of all over the place and you're not really getting to that point that you want to be at, it's because you're not following these certain steps that you're leaving out. Make a couple tweaks and you'll be golden. Now, I call this whole trade out to my Discord live. It is the same approach that I do Monday through Friday. It's the same exact entry model tactics. If you want to try and trade live with me and follow my approach, there's a link in the description. But I hope that you guys are enjoying these videos. You're learning something new every single week. You guys can't deny this, that this is super consistent. This is a copy and paste approach. It doesn't get simplified, or it doesn't get more simplified than this. But I hope you enjoyed the video. Like, comment, subscribe. If you have any future advice or any other videos that you want to see down the line, please let me know. But be safe, guys. Good luck, good trading, and I'll see you guys again for the next upload.